What's up guys, welcome to Bullish Bets. On this channel, we cover all things related to stocks and investing. We take a look at news where we can place some potential big bets with huge upsides. In this video, we're going to talk about Blackberry. Keep in mind that we're not financial advisors, and this video is for educational and entertainment purposes only. Make sure you do your own research before making any investment decisions. So Blackberry was thrown in the same boat as GameStop, AMC, Naked, and all the short squeezes that seem to be happening for the past month or two. It started around a price at $6.50 in January 4th and jumped up to a high of around $26, I believe, and it came back down to $10.32 as of today. Really excited that it detached itself from the short squeeze belief as Blackberry has a lot of room for growth that a lot of investors are overlooking because it has a bad rep of the legacy business that has been failing that it's not a part of anymore. Even when we search up Blackberry competitors on Google, what shows up is Apple, Nokia, Motorola, Sony Mobile, and Palm. These companies are all phone companies that Blackberry really doesn't do anymore. And this is what gives them a great shot to grow exponentially based off, the reevaluation that was supposed to be done, but apparently it was lumped into a short squeeze, which wasn't true at all. But with that being said and done, Blackberry right now, in our honest opinion, seems like a great time to buy. So let's go over why by looking at Blackberry's investor presentation as of Q1 2021. So Blackberry is a market leader of Internet of Things. It's a $1 billion plus cybersecurity company, and it offers a great platform for all security purposes in terms of data. It's a platform for data security for like your fridges, your smart fridge, smart car, smart home, and everything on that end. If we look at this page right here, the revenue from Blackberry in 2014, only 3% of it was from software and services. As of 2020, 98% of it were from software and services, coming from Silence, their cybersecurity suites, and so forth. And this shows that, Blackberry is not a dying mobile company anymore, but it's a thriving software service that offers security to very, very large customers. Their value proposition is, all softwares is provided an endpoint of security that can be offered and keep everyone's personal data safe, which seems to be very hard nowadays. If we scroll through, they're also doing a QNX for automobiles, and they're working with 60% of the auto manufacturers, which include NIO, Ford, all the EV cars, which are going to have a lot of data input into the cloud that Blackberry can keep safe. So it's a software that is software security for the future, for the new economy. Even in our past videos, I've been saying Xpeng, NIO, Ford, all these auto manufacturers are getting into the autonomous driving space, and they need someone to keep the data safe to maintain the autonomous driving. And Blackberry is the market leader for that right now. So there's huge room for growth for them. And if they continue to service these customers, which they're going to grow exponentially as there end up being more cars that require more data and more software driven type of vehicles rather than hardware driven vehicles. The Blackberry customers and partners right now include AWS, Nvidia, Microsoft, Samsung, Baidu, all these big companies, they work with they have top tier customers. 18 of the 20 G20 governments, 9 out of the top 10 global banks, 9 out of the top 10 automakers, 8 out of 10 largest healthcare, 8 out of 10 defense and aerospace, 5 out of 5 largest media companies. So they're working with everyone in every industry, and everyone needs their product. And it's crazy how people aren't seeing this as to why a more digital Internet of Things software company, why they aren't valued at a higher valuation than $5 billion. Even their assets alone are worth more than that. And let's see what the Bears have to say, to really see why it doesn't make sense why they would undervalue BlackBerry. The Bears are saying that BlackBerry doesn't have the scale, breadth, or name recognition to compete in enterprise software with giants like Microsoft and VMware. BlackBerry has been losing share in its primary market of unified endpoint management and automotive infotainment. BlackBerry has yet to prove its ability to grow organically as a software company. And they say that we don't believe BlackBerry has economic moat. Its endpoint management, endpoint security, and embedded system software solutions compete in a highly fragmented market. So they're saying that BlackBerry doesn't offer a good software, essentially. But if we go back and look at what happened with the SolarWinds hack, we can say that this is not true, and BlackBerry offers a great product that can protect a lot of its customers. So according to Google, the SolarWinds hack includes a major cybersecurity cyber attack by a group backed by foreign governments, penetrated thousands of organizations globally, including multiple parts of the U.S. Federal government, and leading to a series of data breaches. So let's go to John Chen, the CEO of BlackBerry's tweet. He mentions, "Did you know no BlackBerry Guard customers were impacted by SolarWinds hacks?" So if we go back to this, it essentially saying that BlackBerry is offering offering security that other software security companies could not protect the biggest hack from. Only BlackBerry can. So what makes these bears think that BlackBerry can't grow organically just by the product alone? And on top of that, John Chen has a lot of incentive to do well for this company. In his contract, John Chen will receive $90 million award if BlackBerry's share price reaches $30. So it has all the fuel and it has the rocket to literally propel itself to outer space just with its current situation and its dominance in its current market, and it's only valued at a $5 billion market cap, $5.8 billion market cap as of right now. If we go back to their presentation and look at their financials, they're already doing around $1 billion in revenue. Although their operating net income is a loss of $152 million, a lot of it's coming from selling and marketing. Selling and marketing, is a price to acquire a customer. Once you acquire the customers, they're gonna stay. And on top of that, with the recent news that BlackBerry was not impacted by the SolarWinds hacks, customers are more willing to stay, and this cost is more than likely to go down, and this will lead them to profitability. So let's look at one of the cybersecurity companies that might or might not be a competitor, but look at what it's valued at. Its current market cap is $43 billion. If we look at the revenue it has, it's doing half of what BlackBerry is. And I mentioned BlackBerry is revenue is 95% of it. It's from software and security services. It's doing half of that, and it's valued at $48 billion, $43 billion. So we put the same valuation on BlackBerry. It should be at near a $90 billion valuation, which pushes the price up to around a high price. I'm not going to do the math right now, but its market cap is at $5 billion. Now, if its market cap is at 90 right now, it would do literally 20 times that. So it's a huge undervaluation of BlackBerry. These analysts seem to believe that BlackBerry doesn't have the ability to turn itself around, but a big part of it was its Silence acquisition was done in 2019. It takes time for a company to create the synergies, and it can't be done overnight. As BlackBerry became a turnaround company, it's doing very well for itself in terms of revenue and profitability compared to CrowdStrike, which is at an outrageous multiple. It's either one. CrowdStrike market cap comes down, or BlackBerry essentially has to go up. It's partnered. It has too much good news for itself in terms of new partnerships and so forth for it not to be worth more. With the fact that it's not a part of the meme stocks anymore, there's a possibility that a lot of institutional investors will see that BlackBerry is a good buy, and it's inevitable that the stock price will go back up. Maybe $30 by end of the year or end of next year, because it will take time. But a key event that's gonna determine whether BlackBerry will be a good buy or not is their earnings report from Q1 2021, as their last earnings report really destroyed its stock price. It went from around $8.50 to a low of $6.95. So if BlackBerry has some signs of good earnings, it will be a good potential buy, and it's a good long-term investment that will double, if not triple in value. So let me know what you guys think. Do you think that it's a good time to buy BlackBerry, or do you still think that there's still a meme stock association to it? How do you think BlackBerry stacks up with other software company in the Internet of Things space? And maybe do you think that BlackBerry can't escape its legacy business and is doomed to stay at $5 billion or less market cap? Let us know what you think in the comments below. If you liked our content, please smash the like button and subscribe. We would really appreciate it, as it helps with this YouTube algorithm. Thank you very much for watching, and stay tuned for the next one.